As you would have seen, our revenue for the first quarter was around 6,900 crores, up about 0.5% quarter on quarter and 10% year on year. The EBITDA margin was around 14.9% for the quarter, which got adversely impacted on account of one, US H-1B visas, and two, the cyclical nature of earnings of one of our companies, where first two quarters are always weak, which are made up in third and fourth quarter. During the quarter, we welcomed the associates of Pininfarina into Tech Mahindra family. We completed the acquisition of Pininfarina on 30th May, and we are now able to offer our customers end-to-end offering in the engineering and styling space. Further, we also closed the bioagency acquisition in the first week of July, and you will see it getting consolidated in the quarter 2 of current financial year. Our net cash balance improved by around 557 crores in Q1 after payouts for bio and Pininfarina acquisitions. Our total reserves stood at around 5,800 crores. However, the biggest destabilizing factor which impacted us and other Indian IT companies as also impacted global economy as such was the exit of United Kingdom from the European Union. Its immediate impact is going to be quite significant because you will have currency impacts. As you've seen, pound sterling has gone down quite substantially in value, and people say the bottom has yet not been reached. The trade between UK and Europe will be disrupted without a shadow of doubt, and therefore the next 1 year is going to see fair amount of uncertainty. My personal perspective, however, is that in the long term things will settle down, and some of the apprehensions which are being expressed at this point of time about the destabilizing effect being a long-term one are somewhat exaggerated, especially insofar as our trade with United Kingdom and the rest of Europe is concerned. I mean, people think that the bottom has fallen out on the global economy. I don't think so. Don't forget that UK's trade with United States is more than with the rest of Europe, and there is no free trade zone there. All countries will work themselves out, and I think very soon we'll see the world back to its equilibrium. So net, unlike most, I am quite sanguine about the impact, long-term impact of this disruption, of this exit. Short-term, of course, we'll have to deal with a fair amount of turmoil. From an industry perspective, apart from the exchange rate impact, the decision could also lead to uncertainty on investment decisions. Yes, it will. But, as I said, it will even out very soon. On the other side of the globe, US economy looks to be getting stronger, with unemployment rate recording a low, home sales recording a decade high, and stronger consumer spending. So consequently, I think the US is looking good, Asia is looking good, net, the things aren't as bad as we seem to think at this point of time. Yes, there is yet another uncertainty on the horizon, that is the US elections. They could be disruptive, but let's see what happens. None of us can predict it. But as we stand today, this company is prepared and ready to face the current disruption and other disruptions which may come, because we believe we provide critical services and these services will be needed irrespective of trade agreements. However, more specific things about the company, I'll ask our Chief Executive to talk to us about it, talk to you about it, and give his perspective on this issue.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.